Hey everybody, Jerry Frank again, and today I wanted to talk to you a little bit about trying to get paid what your business is actually worth. And what I mean by that, we're going to look at how to normalize your financial statements. A good friend of mine, Jim, used to say, "Man, Jerry, I can't send you my financial statements because I'm cooking the books." Well, on this video, we're going to talk a little bit about uncooking the books. If you're like most, you've probably operated your shop in a way designed to minimize taxes. I'm guessing you may have taken some liberties and run several discretionary expenses through the business. Why? To decrease your profit and ultimately reduce your taxes. Look, I get it. That's good for saving on taxes, but it's not necessarily suitable for valuating your business. So when the time comes to properly value your shop, you need to normalize and make those adjustments in your financials. Let me first start by giving you this cover my behind statement. I am not an accountant. I'm not a tax advisor. The advice I'm giving you is what I've learned through my experience of selling several businesses and most recently selling my auto repair shop about a year ago. So again, not a professional, but I've learned from the school of hard knocks. So most adjustments when you think about normalizing your financials are going to fall into a couple of categories. Discretionary expenses. These are expenses paid by the business that personally benefited the owner and not the business. Then you have extraordinary expenses. These are expenses that the business paid for that were exceptional, one-time occurrences typically, and they're not likely to reoccur. I'm going to give you some examples of both of these in just a moment. Non-operating income, money that you may have received that wasn't due directly to operations within the business. And then of course, you're going to go ahead and adjust out that depreciation and interest. That's pretty straightforward. Check with your accountant on that item. So first of all, I got to issue you a warning. If you are over aggressive or inaccurate with this exercise, if the buyer catches you in a lie, and I mean a little lie in just one thing, the buyer will likely question your credibility in everything you say and do moving forward. This is not the time to stretch the truth. All right, so let's talk about some examples of discretionary expenses. If you have any personal use of vehicles, in other words, if you're running the car payments for your car through your business, along with the gas or any of the repairs, you want to be able to remove that from this exercise because again, that is not going to be an expense or shouldn't be an expense the new owner will incur. Insurance costs related to your personal needs. So I'm talking about you personally. If you're paying your health insurance, your auto insurance, your life insurance, things like that, your personal insurance costs through the business, you can deduct that. Your owner's salary, if you're not active in the day-to-day operations. Now listen, if you're writing service or you're the main technician, you have to keep that payroll on the books. But like in my example, I just had a management fee. I was charging my auto repair shop a management fee each and every month as I was not involved in the day-to-day operations. You may want to consider removing that. Other payroll. So if you have family members or anybody else that's not actually working in the business but is collecting a paycheck, you certainly want to remove them. And then I'm talking about retirement and your 401 contributions for you and your family members. Not for the whole shop, just for you. Rent adjustments. If you own the property, you may be paying yourself more rent than what is fair and what is market value in your area. So if you're doing that to save a few bucks on taxes, you might want to relook at that rent and see what proper market value is for the rent and lower it to that number. Any personal use items, I just put a few of the big ones on here. Your cell phones, any subscriptions, services, maybe you're having your grass at home cut and grass at the shop cut, they're combining the bill. Any of those things, any of those discretionary purchases that you may be running through the business, you want to go ahead and remove those at this time. And then, of course, maybe entertainment, meals, travel. Maybe you took a cruise with one of the local parts stores or went on a vacation and you tried to write it off through the business. Again, if you can document it that yes, it was for personal use, you want to go ahead and remove that from this exercise. Then there's extraordinary expenses. So these are typically a one-time occurrence, something that's unlikely to reoccur. Things like maybe some new equipment. Maybe last year you bought a new alignment machine or a new YFAC machine, something that's not likely to reoccur. You may want to remove those from this list as well. Maybe you put an addition on the building. I remember many years ago I added 4 bays onto the rear of my building. Again, that's not normal in the course of doing business. So if you've made that addition or maybe remodeled your showroom, added a larger waiting area for your customers, those types of things, you can remove that during this exercise. Perhaps there were major improvements. You had to put a new air conditioning unit on the roof, or I can recall recently we had to re-asphalt the parking lot. Again, that's not a normal occurrence. It's a once in a blue moon occurrence, so you can remove that. Any one-time expenses. What came to mind, I can remember the bridge was closed in front of our shop and it stopped traffic from coming to and from our shop. That year we had to spend an additional 10% in marketing to keep our car count up. So again, that was something that was extraordinary and not part of my normal cost of doing business. You may want to consider removing that. And then of course, lastly, I've got non-operating income. So maybe you've received a large settlement from a lawyer or something like that. How about this one, COVID cash? Any of that free government handout that you received a few years back, you want to remove that. That's really not income that came from the business. So you want to make sure you remove that additional income from your financial statements. Okay, now a couple of things. I want to re-emphasize this here. It's not the wild, wild west. Your adjustments must be accurate, truthful, and you should be able to back it up and justify it if any questions arise. And I would say really in this exercise, less is often better. My suggestion would be to limit the number of adjustments. In other words, don't nickel and dime things. Look, this isn't the wild, wild west here. If there's a one-time purchase and it's say under a couple $100, I'm going to probably let that slide. I think the more adjustments you're making to this financial statement, the more red flags it could potentially raise. So often less is better. So to get started, assuming you're running QuickBooks, you can simply export, say, last year's financial statement to Excel. Instead of printing it, you're going to choose the option like the screenshot shows you right there, export it to Excel. Now you want the detailed report. Yes, it's going to be a lot of pages. You're probably that P&L is going to go from 1 or 2 pages to 30 pages, but it's going to show you all of the detail. And if you export it to Excel, you could add another column and you can go ahead and start noting those exceptions. Hey, I hope you enjoyed this video. If you would be so kind, just hit the like button. And if you have any comments or questions, or maybe a topic you'd like me to cover in the future, feel free to email me at jerry@maverickshopowners.com. That's all for today. Have a great day, everybody. Take care now.